continue our conversation on markets, the economy, and what you should be doing with your portfolio. Mish Schneider, Director of Trader Education and Research at MarketGauge.com. Mish, nice to see you. Thank you for being with us. Of course, we got the big jobs report this morning. How important was it to you in your market strategy?
Well, it actually was more of an affirmation of what we've really believed all along, which is that we aren't necessarily going into a recession, and that we were more in a period and will continue to be in a period of stagflation. And this kind of proved it, because essentially the labor market isn't slowing the way people think, although there's sort of other statistics to look at, like labor participation rate, wages going up but not in line with the rate of inflation. But overall, what we're really seeing here is the economy is stuck, while we still have to really focus on the prices of raw materials as the best real dictator of what's going to happen, I think, not only with equities, but in terms of Fed policy, because they really basically have said that they are knee-jerk reacting to a lot of things. And as I heard you say before, month to month seems to be the case even with the Fed. So to me right now, the unemployment, like I said, we know that the economy is limping along. But what we don't really know what is going to be the impact if these raw materials, particularly food and energy, do not take any more of a break and in fact start going up like we're seeing actually today, especially in food and soft commodities.
So no recession. You were talking about the conversation I just had with Joe Brusalis of RSM, and no recession. So everybody keeps saying that we're in a recession right now. Because that would mean 2 consecutive quarters, right, with negative GDP growth. And the idea here is, I guess it would feel better if we're not in a recession. I wonder how you change a portfolio accordingly. What are you doing with a portfolio now? Are there areas that you see opportunities versus stay away from?
Yeah, well, you know, it's funny because actually people don't want to see a recession, but yet investors want to see a recession because they think that the Fed's going to be more accommodative if we see recession. So there's also that sort of perverse feeling going on. But yeah, getting back to investing here, I'm really trying to stay consistent. I think what sets us apart at Market Gauge and myself is that we spent 13, 15 years as floor traders on the commodities exchanges, and so we know what this sort of thing looks like. And we know that commodities can be very dislocated in price versus the fundamentals, go way down like we just saw with oil, sugar, copper, et cetera, the precious metals which haven't moved. So we still believe that they're sleeping giants. So we have reinvested a little bit back into some of the food commodities, the soft commodities, bought a little taste of copper here, still aside looking at those precious metals. And we've already come into today invested in China, and we have some biotechnology. We also have some solar energy. So I think if I'm going to expand the portfolio from here, we bought ARC actually this week because we felt
You did?
Yes. First time ever I've done this, by the way, is advise our clients to go into it. And I think it's because A, we had a really good risk, kind of know right away if you're wrong. B, it was so incredibly oversold. And C, is if people are feeling more optimistic that we're going to muddle through this, ARC will go up because of a lot of that disruptive tech and a lot of the exposure I wanted to things like Teladoc and Roku and Coin and some of the other things that she's in. So we'll see. But here's the key, nimble, nimble, nimble. Outside of that, what I really am looking at maybe is we're watching Ford, for example. We're watching floor construction, which is tied to energy, as possibly getting back in. Staples, yes, are still good, although they've been volatile as well. And here's the one other thing I want to add to that, is we're also looking at some of the other country funds outside of China. So we are looking, we've already advised our clients today to get into South Korea. We're looking at Vietnam. We're not in there. Mexico, Brazil potentially. We're starting to feel that maybe outside of the European countries that it might be time to get into that, especially if we can manage to stabilize here.
How do you do that? How do you suggest folks start to nimble? a nibble on those areas? You know, are there ETFs that you're looking at? How do you suggest people do that? Because ARK obviously is a basket of a lot of these innovation ideas that is down about 50%. So it really is a fun kind of company, you know, group of companies. So everybody understands ARK here at home, but trying to invest abroad is a different ballgame.
Yes, and so the ETFs are a really great way to do that, Nicole. So for example, with China, we've been in FXI. And with South Korea, it's EWY. If we were looking at Mexico, it would be EWW. So each one of the countries does have its own fund. Now, of course, when you get exciting, like with China, you want to maybe go outside of the ETF. But when you're nibbling, it's nice to have the country fund because it gives you exposure to a lot of different things. And it's important to see what's weighted in each of those country funds. With FXI, there's some tech, obviously, exposure. But now tech is totally blasted with Alibaba and Baidu, et cetera. So that's really where you can start to expand and build a portfolio greater. But for nibble, yeah, I like those country funds really great. And especially here, what I really like more than anything is risk reward. So you know right away if you're wrong. And if you're right, you can catch a nice move. And in this type of market, when you catch a nice move, it definitely behooves you to take some profit.
Yeah. It's wonderful to see you. Mish Schneider, thank you, Director, Trading, Education, and Research at marketgauge.com. Have a great weekend. Thanks a lot.
Thanks.